Interest rates, rent, and inflation are all skyrocketing. What will happen to the real estate industry and how can you protect yourself? Stay tuned and find out. Hey, if you're a homeowner, investor, or interested in buying property here in South Louisiana, we have all the data that you need. Hi, I'm Michelle with Katie Real Estate, and this is your market update. The big news right now is rising mortgage rates. So let's look at what mortgage rates have been doing so far this year. Interest rates started at 3.11% in January, and at the end of March, they were at 4.67% and climbing. So why are interest rates rising? Inflation is driving the increase in mortgage rates. The experts are predicting that rates will continue to rise, but likely at a more moderate pace. So the big question people have been asking is, what will happen to home prices as the interest rates rise? Well, most people think as rates go up, prices go down. But here's some data from Freddie Mac. What you're looking at here is the impact of rising rates on home prices when there is a rise by more than 1 percentage point. Going back to 1993, you can see the data shows, on average, an 8% increase in home values when interest rates increase more than 1%. Overall, you see that rising interest rates do not have a negative impact on home prices over the last 4 decades. But what will happen to our sales when you have 1% increase in interest rates? When we add sales data to this chart, we can see an average decrease of 5% in sales overall. As rates rise, that tends to reduce buyer activity and price some buyers out of the market. We are in a fundamentally different environment than what we had in the past. When inventory is low, home prices will continue to rise. Inventory is still very low, and that's the driving force of rising home prices. So, although we expect the interest rates to continue to rise, we expect them to rise at a slower pace than what we've seen in the last few weeks. One Freddie Mac analyst said, "History suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow." The Freddie Mac analysis shows that a 1% increase in mortgage rates results in home prices appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change a home price growth from 11% to 7%. The mortgage rate increase will slow some of the frenzies, but we're not talking about depreciation. We're talking about softening and deceleration, which will slow some of the buyers as we move forward in the housing market. This current lack of inventory is contributing to a seller's market. The average price for the first quarter of 2022 has increased from $251,000 to $271,000. That's an 8% increase year over year. Let's take a look at this next graph from Home Price Forecast for 2022. I think it gives you a very good picture as to where home prices will be according to the experts. Here you can see the average of the 7 experts predicting home values to increase 6.7% in 2022. So as you can see, all signs point to prices continuing to rise, but at a slower pace. I hope you found this information valuable. If you'd like to receive these monthly market reports, or if you'd like a free market analysis on your property, I would love to help. Stay tuned for next week when I break down pending sales and foreclosures. I'm Michelle with Katie Real Estate. Thank you for watching.